I'll wait for Brian. Brian emailed me, said he's ready, so you have to send him this link and then the. Can you guys hear me? Give me a Y if you could hear me. See the crude oil chart blowing off. Okay, bro. So good. Adinda's a fighter. She's persistent. She wouldn't quit. So we're good again. Everyone doing all right? Even with technical difficulties, Brian Twomey should be with us shortly. Just waiting for Brian. Nice rally in the S&P. Stand by for Brian Twomey at author Brian Twomey. What kind of fool am I that got out of my crew? I left 4 figures on the table again. What can I do? There'll be another chance, another trade that I will stick with, and more money I will make. Da 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 da. It's always been my problem. Exits have been more of my problem than entries my whole career. Yeah. Brian's in the house. Hi, Brian. I agree with you, Ali. So, Brian, are you in the Hangout, buddy? We sent you another link for the Hangout. Dinda, you. Okay. What do you got, Cyril? Kiwi. All right. So your work kind of lines up with Ricardo's. Kiwi. It's the same way the yen looked down there. Everyone thanks Cyril for his harmonic pattern for a Kiwi peak. Don't fade Cyril's work. Cyril's very good. He's a top gun. Thank you, Cyril. Waiting for Brian. 10:33 and what? In gold? In gold? Paging Brian Twomey to the hangout, please. Paging Brian. Okay. The Russell. Okay. Where's it at now? Paging Brian Twomey. Please come to the hangout to hang out with Dale Pinker, your brother. Great. Paging Brian. Come on, buddy. I'm sitting here in the hangout. Waiting for you, brother. Stick around for Brian. Brian King? No, Brian Twomey. The author, Brian Twomey. If you're in the room, Brian, close it out before you come into the hangout because we'll get echoes. Brian is king. Just waiting for him. There's Rick's look in the crude. Yeah, up here or down here. Yeah, probably here. Thank you, Ricardo. I don't think we'll get that break now. Maybe not until, I don't know, maybe if the dollar turns. Jax, do you have a note? Thank you, Rick. You have a note, partner? Did your dog eat the car keys? You got locked out of the house? What happened? You overslept? What happened, buddy? What happened? I think it's the first time you've been late. So it's okay. It's the first time, buddy. We're human. We're all human. We make mistakes. That's humanity. So all is forgiven. How about you with me? You forgive me for being myself? How about you? You forgive me for being me? Who forgives Dale Pinkert for being Dale Pinkert? Give me a Y if you do. Please forgive me. No, I'm not. I'm going to give you a bonus. Time and a half. Time and a half, buddy. Will everyone in here please forgive me for who I am? Anyone willing to do that? Give me that absolution. Abel forgives me for being who I am. You got a confirmed high, you mean? Confirmed top? Okay, Adinda, do you see Brian's email? Because we're running out of time here. Zurich's calling the top in euro here. Only looks like 2 drives, but maybe, huh? Divergence. Maybe this is the head. Maybe we get a head and shoulders top. Thank you, Zurich. Zurich Rembrandt. Everyone thanks Zurich Rembrandt. Don't fade Goldie. Yeah, maybe to 113.40 to that return line. Jax forgives me. Not many people forgive me for who I am. So Brian, we sent you that. Brian, we sent you that Google Hangout link. Why don't you look in your email again or send it again, Adinda? Let's see if Brian could get in there. You see it in your email, Brian? And when you're in the Hangout, you're going to have to turn the volume down in LAR so we don't get echoes if you're listening to me now. It's our fault. We had problems with the Hangout today. Okay. It's too bad because I really wanted to spend some time with Brian today. Otherwise, we'll have to reschedule. No, I didn't see it. Post it. Did you do it in my stream? Did you tweet it in my stream? Post it here. Dow's up 134. Okay. I didn't see it on Twitter. I'll look. I don't see it. No, it didn't come through my stream. No, I didn't see it. So tweet it to me. I hear Brian.
Hey, Dale.
There's my brother.
Wow.
Hey.
You're a little nervous already.
I'll tell you, buddy. I'm so glad to have you here, Brian. You know, you're one of my favorites. Okay, people call me a slut because I have bromances with all these great minds in the market, but you're definitely one of them, bro. And you know, before we get going, go ahead.
You're my brother Dale, brother Dale, friend of Forex forever. You're the best.
I want to acknowledge that last year, Brian, you were so right. You know, I kept trying to top pick the S&Ps, and you kept telling me, Dale, we need euro yen to take out a certain level before risk off becomes a reality, and that's exactly. And I forgot what the level was, Brian. I usually remember things like that, but you were absolutely right. It took a breakdown in euro yen for this correction or beginning of a bear market in equities, whatever you want to label it, happen. So great analysis. I've called you an intellectual grinder because when I read your research, it takes me so long to absorb all the intricacies of your research that sometimes my head explodes and I have to come back to it later. So
hey, put on your seatbelt for today.
Yeah, so you know, I want to talk about the last couple of things that you sent me. You're talking about, because I know also last year you were pretty negative gold. You thought gold was going to go to, you know, 1,000 or so, and we bottomed at 1040. And then all of a sudden, I'm getting special reports from you that's talking about a future of precious metal anchored currencies. So with what's happening in the market, why don't you tell Lar and explain to Lar what you're talking about in those reports? I forgot who you published that with, but it was a definite change of heart from you.
If you look at the FX Trader magazine website, the article is there. There's another one on investing.com on more of future of currency markets. And then I'm a special thank you to Emanuele at FX Trader Magazine for putting that article on there today. She's terrific. I thank you, Emanuele, very much. Okay, we have to go back to 2008 for just a second here, okay? First of all,
I tell you what, bro, I wouldn't mind going back to 2008. You know, it makes me 7 years younger, 8 years younger. So, you know, I right now, everyone here in the community, let's get in our time machine. All right, so we're now in our time machine, and Brian's taking us back to the last financial crisis. Yeah, all right, we're back to the future, Brian. Go ahead, buddy.
Okay. 2008 crash. What was there were a couple of instances about this crash that you need to know in order for us to move forward. First of all, 2008, we entered the fourth quadrant of the free float since 1971. 2008 was almost exactly to the day of the 100-year anniversary of the great 1907-1908 bank crash in the United States.
The Knickerbocker. The Knickerbocker.
Is that what we called it?
They called it the Knickerbocker crash, the bank panic 1907, 1908.
Yes. Okay. Thank you for that. Okay, now, what happened? Well, central banks went wild, and they stimulated by buying bonds, and in the process, the more you spend, the more interest rates drop to the floor. If you look at John Maynard Keynes in the general theory, John Maynard Keynes, not a favorite of mine, okay? The idea was that if, you can only buy so many bonds, and you can only, and interest rates can only go so far to the floor until they reach zero. Then you have what John Maynard Keynes called a liquidity trap. In other words, what's the trap? You're stuck. You didn't do anything for your economy. Now you're stuck with all this money. Yeah. What's the next step in the process?
But let me just interrupt you. I know I do it too often, and I'm not going to.
I don't mind
the interview. But how do you define a quadrant as a quadrant a certain amount of years?
Okay. I hope you can see this all. I have 200 years of 50-year periods marked out for you guys.
Okay, so the quadrant is 50 years.
No, yes.
Okay.
You have to look at market period. I'm sorry. Let me back up. You must look at market periods in 50-year intervals. Why 50? I don't know. I mean, that's just the way it is. It works, okay. And it works out so perfectly. Here, I call the free.
You discovered it.
Yes, but you know something? You know who I have to thank for this? There's two things that I have to thank for this. There's one person by the name of Martin Armstrong. Yes. I listened to that interview that he did with
Gonzalo.
Yes, I'm sorry. I like him very much too.
Yeah.
I listened to that interview and I took every bit of advice that he had. I read Hoover's 1931 diaries when he said exchange rates must inflate to the interest rate. And then I wanted to know, how do you make these calls? What are these numbers, So I had the benefit of writing my Euro-Yen paper, and I just became fascinated, and I just took over where Martin Armstrong left off. I said, I'm going to figure this guy out because he's brilliant. So what I did was, now moving back, the free float began December 1971. Let's call it, so apples and oranges are together. Okay. Let's call it January 1972. What do you got? Okay. What I found in 200 years of market outlines in 50-year intervals, that's the full cycle, is that market crashes occur in the second quadrant. You have, here's where it started, January 72.
Yes.
Whenever these market periods begin brand new, your first quadrant, this is happy days are here again. I mean, this is where markets are functioning. This is where you make money. This is where economic times are wonderful. But they only last for so long. Then you hit the second quadrant. Crashes occur in the last 200 years, all in the second quadrant. 1987 was considered a crash. In today's terms, looking at market volatility and point movements, it was really nothing. But, then it was a big deal. So they're factoring it as a crash.
I went downstairs to see if my bank was still open that day.
Wait till I want to get into negative interest rates. And I listened to that interview yesterday with Mark and Mark Chandler, and I thought that was very interesting.
I just want to share one more thing. You and I are thinking, why 50? And you said, I don't know. Well, my mentee, and I know you also spend time reading the Bible.
Yes.
That Old Testament, 50 years, every 50 years, there was a jubilee of debt forgiveness.
Yes.
How about
Yes.
that? Huh?
Yes.
Go ahead.
There's a book out there written by my friend, my old school buddy Barker. It's like in the 1980s, The Jubilee on Wall Street. It is the Old Testament. Every 50 years, holdings revert back. Okay?
Interesting.
And then the other thing is, why the number 5? Well, if you look at the start of time, the Romans, the Israelis, or I should call them the Jewish people, the Romans, the Greeks, the Israelis, life began with the number 5 when we began counting. And this is why I devised my moving averages are all based on 5. They have to have number 5 is the most significant number in all of market trading like you've never known. So, and I guess maybe the 50 is biblical. I'll give you that. My friend outlined that. I got his book there. I've kept that thing for 30 years. So 1972, you break your quadrants down in 12.5 years. Okay, so you go from 72 to 1984, and you're going to have wonderful times. Guess what? Wonderful times, for the most part, you know. Then you hit the quadrant 2, 1987.
I had fun in the 70s. Sex, drugs, rock and roll, buddy. You were there.
Grateful Dead, I love them still today. I so miss Jerry Garcia, I can't tell you. Gosh, I can't believe I said that. Yeah, I'm one of those guys. I've been to every one of the concerts. I had a great time. Okay, you had 1987, and then here we go, 1996. What happened right here? The Mexican peso crisis, 1994. Thai baht, Russian ruble crisis, 1996. Then it corrects, and you're into quadrant 3, and you're doing okay. You know, you're correcting. Here is the end. Here's where we are right now. This is the 4th quadrant. And then, you know, 12.5 years is the perfect separation of your quadrant. That doesn't mean exactly, you know, 12.5 to the very day, to the very month. You're going to see. What I'm saying is we're here. And you know something? If you look back, and I did, to the BOE was the very first central bank to establish in this world in 1694. Then there was 1695, the Scottish Central Bank. Then there was 1717, when Sir Isaac Newton overvalued gold in relation to silver, and all the events. Everything. We are from 1694. We are in quadrant 4 right now. What happens? What happens? It doesn't matter how you look at it. Look at it from the 1600s, 18. I've looked at this thing from every gold period, the greenback period, the exchange gold period, Roosevelt's gold period, Bretton Woods, 1946. It doesn't matter how you view these years. We are in the 4th quadrant.
So we have a confluence of macro quadrants, micro quadrants, time confluence, all coming together no matter what time frame you're looking at in this time zone we're living in right now.
Okay,
May you live in interesting times, as Shakespeare says.
This is what's happening now. And wait till we talk about negative interest rates. We're in a revolutionary period right now. Okay, where does this end? Well, depends how you look at it. I view it from January 72, 2020 is the 50 year. If you view it from 1971, I think it's 2018. Or, you know, so we are close. It doesn't mean, now again, it doesn't mean 2020 is the crash, 2018, 2017. What happens in the 4th quadrant is the old is gone, Out with the old, in with the new. What is the new going to be? How about this? Wait a sec. Where's my other one? That's today's market. Now I got this thing marked out. I hope you all can see this. I went back to 1922. Look at the events. This wasn't exactly a perfect event right here, as normally happens. The 29 crash, the 1922 Genoa conference with the British pound, the overvalued British pound historically since 1717. That if you look at the 1982 gold report, the supplement that Ron Paul and Lou Learman wrote, it's a supplement called the Case for Gold. They outline this Genoa conference and the British pound in really, really detailed terms. The British pound is not a sound currency. That's exact words. And really, there's many instances where that's exactly true. Why is the British pound at 1.4, the euro at 1.0, when these two guys are brothers? It's overvalued. Okay, so back to here. What do we got? I don't know. We've got, the Fed began open market operations in 1922. We had the Genoa conference that started the new period. Out with the old from the fourth quadrant, in with the new. We had
so the Fed waited 9 years after being established before they intervened in the open market.
Yes! That's what I said, the same thing. That is unbelievable. But true. Remember something. These central bankers are always behind. They're not the leaders. They're always behind. And historically. And why are they behind? Because the common problem historically since 1694, when the Bank of England first started the first central bank, was inflation. They have never ever known, they've never understood how to bring inflation higher, lower, right amounts. This is the reason why markets were created. This is the reason why you have market ups and downs. This is the reason why you've had crashes, structural changes, market changes, and then new periods. It's all, the whole thing has been all about inflation. They have never learned. They've never learned,
Has there ever been a central bank that has, besides winning short-term battles against deflation, won a war against deflation?
The New Zealand Central Bank, I say this, the New Zealand Central Bank, in my opinion, and I know these people extraordinarily well. When I was writing Inside the Currency Market, every person in that bank knew my name with questions and answers and back and forths. But I know them extraordinarily well, and New Zealand in particular. New Zealand, in my estimation, is one of the smartest central banks in this entire world. They are smart. They are ahead of the curve. They know what they're doing. But their problem is that they're subject to the vagaries of the up and down world, and there's nothing that they can do about it, especially as a commodity nation. Australia, the same.
Brian, I'm so sorry to interrupt you. We do have another show coming on after me. I want to reschedule so we could do this again. But
okay.
Can you give me a bullet point for the average guy like you and me? We're now multimillionaires. What would you recommend people do to protect themselves in this new zone? And for speculators that want to take shots for being positioned for what you're looking for, what instrument should they be accumulating?
Keep your eye on gold in case we move along to some kind of a gold standard. Watch gold very, very close. What the central banks are trying to do with negative interest rates is They are trying to drop the exchange rates to practically nothing. They're going, the euro, the British pound, they're all going down. The Japanese yen, they're all going down. Okay, the euro now is on a correction. Don't sweat it. The British pound is on a correction. Don't sweat it. They are
So stay long the U.S. dollar and add gold to your physical core holdings in this environment.
Yes, yes.
All right, now what I'm going to ask you, if you could come back one day next week in our opening hour for us to continue this discussion, because people are disappointed that we have to wrap it up, but there's another show following me, so I have to wrap it up here. But Brian, before you came on screen, I was kind of tired, and you've got me all pumped up again. So another great interview with Brian Twomey at Brian Twomey. Is that the best way for people to follow you and get your research? And I'll contact you by email, maybe Monday or Tuesday. We could have part B of this.
Yes. Let's see. Author B. Twomey is the Twitter. twbrian.wordpress.com has got hundreds and hundreds of articles. There's also 300 trades that everyone has hit targets, except that Canada trade. That went against me real bad. But
okay, well, Brian, I love you, buddy. And I'm going to be waiting for next week to get more of the details about your change of heart in precious metals and the zone that we're in. Thank you so much for being with us today, my trading warrior brother, and have a great weekend. Good luck on the NFT.
Thank you, brother Dale.
Okay. See you Monday or Tuesday for sure, right, buddy?
I'm ready. Anytime.
Okay, we'll also have the Super Bowl indicator to throw into the mix, huh?
Okay.
All right, Brian. Adios, bro.
Okay.
Everyone thank Brian. His Twitter handle is Ali says he loves you.
I love you too, guys.
Type the links to Twitter and WordPress.
Mauricio. Who's the girl? Adinda, thank you.
Yeah, Adinda.
I know you work hard back there. I know. I watch every day.
Thank you, buddy.
Okay.
All right, so my friends, I'm going to have to wrap it up. There's another program behind this. Thank you, everyone, for your contributions today. Good hunting. We'll open an hour earlier for the NFP tomorrow. Thank you, guys, for all your great contributions. Adios. See you tomorrow live with Val and Yohei for the NFP. Remember, don't just count your pips, count your blessings. See you tomorrow.